Good morning. It is the 16th of September. I'm Joe Neighbour from Signal Centre talking ball this morning. Hope everybody's well. Just going to run through the latest headlines and then get stuck into some charts about what to expect from the day ahead from a technical perspective on the price action front. So, first and foremost, the energy situation in Europe continues to be looking pretty bad, really, getting quite dire, with the French government planning to spend about 580 million euros to help poor households cope with the soaring bills. Power prices have surged to records this month following extended nuclear outages and a period of calm weather that reduced wind generation. In the UK, winter blackouts are possible after a fire struck a cable shipping electricity firm from France. So we're seeing prices skyrocket across the board, and obviously this is going to start having an impact on everyday consumers because prices are going to start going through the roof, unfortunately. Elsewhere in the UK, Prime Minister Boris Johnson made big changes to his cabinet after a drop in support in the wake of the government's handling of the pandemic. International Trade Secretary Liz Truss replaced Dominic Raab as Foreign Secretary, while the former Secretaries of State for Education, Justice and Communities was also ejected. The reshuffle was done ahead of the Conservative Party conference next month, amid warnings of tougher COVID-19 rules if cases continue to persist at the rate that they are at the moment. A third dose of the Pfizer vaccine can slash rates of COVID-related illnesses in people 60 and older. That's according to the latest study out of Israel. The results come in amid a mixed response to the potential booster shot rollout, especially in the US, where top health officials and vaccine staffers are quite divided on the issue. In terms of European futures, they are shrugging off the concerns in Asia over China risks amid a broader climb in energy shares and oil prices rising yet again. So let's get stuck into the charts. First and foremost, I'm going to start with foreign exchange. I'm going to look at the dollar index as the starting point here. So yesterday, we saw a bit of weakness. As you can see there, that red candle, that comes on the back of a couple of days of indecision. We are posting higher prices today, up by 0.21% as things stand. But I guess most importantly, from a technical perspective, we continue to trade within this bullish channel. Therefore, further prices look likely for me, still bullish on the dollar index, and think that we will get up to these resistance levels at 93.43 to 93.73. So keep an eye out for that. On the flip side of this, looking at euro dollar. So yesterday, yes, we did see some gains, but certainly not the same sort of level that of declines that we saw on the dollar index. We are pushing lower again today, down by 0.27% here on euro dollar, and it looks to me as though we are continuing lower here towards these key support levels at 117.04 to 116.64. And down at these sorts of levels, things do become really interesting, because a break of these support levels here, and there's a hell of a lot of fresh air to move into on the downside. And also, for me, that would complete, quite convincingly, this head and shoulders top pattern that I feel like I've been banged on about for a number of months. So, keeping a keen eye on that. Looks as though weakness is set to persist there on euro dollar. So for me, it's a case of selling into rallies. The riskier assets like Aussie and New Zealand dollar, bit of a mixed bag. Aussie is looking weaker than New Zealand dollar still. Aussie yen pushing lower after a retest of this resistance level, this big band of resistance that we've got on the daily chart. No signs of prices slowing down on that front at the moment. So we look as though we're heading down towards prices around about 77.90, which is where this key support lies from this swing low that we posted on the 20th of August. Aussie US dollar, not as severe on the downside as Aussie yen, but still not looking particularly healthy. After this corrective rally that we saw into these resistance levels here, we are posting lower prices. Yesterday's low came in at 73.01. That's the key level that I'd be watching for today. If that breaks, then pretty much just a confirmation that lower prices can be expected. The next key support here is down at 71.06. Looking at euro sterling, not much has changed on the outlook here. It continues to trade within this bearish wedge or channel type pattern. We rallied into some resistance close to sort of 86.20 and failed, and it looks as though prices are heading lower. The big level down here is 84.50. That's the key low that we posted on the 10th of August. If that breaks, then it looks pretty ugly still, really, for euro Euro GBP, and we could be heading down to these lows that we posted back in 2019 at 82.75. If we look at cable, still continues to be a bit of a mixed bag. We are really could go either way here. So at the moment we're trading in this short-term downtrend. We've had a couple of attempts at trying to break above it. Key resistance here at 138.91. We tried to overcome it on the 14th of September but failed, and since then price has been contained by this short-term downtrend. So I've got these two arrows drawn on. I think the favoured move probably is for a continuation lower here down to these supports at 35.71. But if we can break above these resistance levels at 138.90 on a closing basis, then I'd be looking for a test of this level up here at 139.83, and then we can start potentially opening up the upside towards the previous highs that we posted back here in June. So for now, a bit of a mixed bag. Really need to wait and see. Ideally, if we see a reversal candle around here and take out yesterday's low, then I think the bears can get a bit excited about lower prices. But if we can close above these kind of levels here, again at 138.91, then that starts to open things up from the bullish side of things. New Zealand dollar, US dollar, still sort of clustering around this resistance level at the moment. There's nothing really convincing in terms of the candles at the moment. There's no kind of big bullish impulsive move. So while it continues to hug around this sort of zone of resistance that we've got on the daily chart, I think I would prefer to sell it. And I think from a risk reward perspective, selling here with stop losses just above the highs that we posted here on the 3rd of September represents pretty good risk reward for a move back down to these support levels down here at 68.05. So that's pretty much wraps up what I'm looking at on the FX markets. We will get a bit more in depth on these when Steve is back next week. So let's move on to Bitcoin. So this has had a little bit of a bounce back, which is quite nice off of this support level here at 42,830. 3 days of consecutive higher prices. Obviously today hasn't finished and we've got a long way to go before we close this off on session, but things are looking pretty good at the minute. I think this is the key level that we need to watch for, the 61.8% Fibonacci retracement level from these highs that we posted back here in April down to these lows that we posted in at the end of June. This for me is the key level. If we start to see some rejection around here, then maybe from a risk reward perspective, selling at this kind of zone, targeting lower prices could be a good strategy. If we do manage to break above these key highs that we posted on the 7th of September, then for me that will open things up for a retest of these highs up here at just shy of 65,000. So looking pretty good, although volume isn't overly supportive on Bitcoin at the minute. If we take a quick look down here on the volume side of things, you can see volume has been dipping off as this corrective bounce has happened. So is there enough participation to drag this higher? Would be the key question I'll be asking from a volume perspective. Okay, let's take a look at now at commodities. So oil continues to push higher after breaking out of this corrective channel. And again, I believe what we formed here is a bullish flag. So this is the dominant uptrend. We saw a consolidation or a correction, and now we've seen a breakout of this channel, taking out resistance at 70.40, and we can start targeting this most recent swing high from the 6th of July up at 76.35. If that gets taken out, then really that just confirms more that this is a flag and we are going to see a continuation high. There doesn't seem to be any let off in the energy prices at the moment. So for me, it looks like oil is going to continue moving higher in the short term, and I think dip buying would be the best way to approach that. Okay, looking at silver, not really a lot going on here. My chart's a little bit messy, but as you can see, price action has been a bit kind of sideways, and that really has been the case since August, to be totally honest. There's not really been much for people to get their teeth into, or any kind of defined trends really with regards to silver. So expecting more of the same. I think probably down here you can be trying to maybe buy dips towards the lower end of the range, and up here obviously trying to sell rallies. But for now and in the very short term, price action remains a little mixed. And it's a similar situation with gold actually. So this continues to trade within this bearish channel, but if we zoom out and look at it from a longer term perspective, then maybe this is just a consolidation within a longer term uptrend. Obviously, price is still ascending higher. A little bit of a corrective move down here, although this has been quite a prolonged corrective move. But for me, we need to see these levels above taken out before we can get excited about a continuation higher. Key levels on the upside are 1834 to 1845. And also, if we do overcome those, we will exit this bearish channel, and then we can look for higher prices. But for now, in the short term, looks a little bit mixed. I will come on to something on the intraday basis that looks quite interesting on that from a gun to the head trade perspective in a short while. Okay, on to indices now. So really, a testing time for indices. Obviously, we've seen a little bit of mixed price action in recent days. This is the Ftse 100. Prices since they broke from this short-term uptrend have remained pretty choppy and non-directional really at the moment. The key support on the downside is at 6992 for the Ftse 100 and resistance up here at 7114. So I'm really expecting prices to remain within this range for the time being, and the break of either end of this range is likely to dictate the next direction. So if we see a break to the downside, then we'd be targeting a move down to this swing low that we posted on the 19th of July, which also I think is going to marry up quite nicely with this longer term trend line that began at the height of the pandemic back in March last year. So quite an interesting level there to watch. I think that will attract dip buyers back into the market. It is possible that if selling does start to pick up, then we could see some panic potentially in the market, and that could exaggerate any downside move. So if we do take out these key lows and this trend line, then the next level to look for below that is the 38.2% Fibonacci retracement level from these lows in October last year to these highs that we posted most recently in the beginning of August. Down here, again, I don't think there's anything overly concerning from a long-term perspective. For me, it would just create some value for longer-term shareholders to get back into the market and put some fresh capital to work. But interesting times await, I think, on the indexes. Just waiting to see where the next move is really, where the next impulsive move is anyway. Looking at the DAX, so got a crudely drawn sort of top pattern on there. Could happen. But at the moment, we have seen this break of trend and some quite choppy price action. If you look at yesterday's price action, and just zoom right in here, this candle here, really indecisive. We did make a new high, but then, we didn't really close any higher than where we opened on the session. Bit of strength today, but obviously there's a long way to go on the session. We're only up by 0.1% as it stands. I think this is the key level to watch at the moment. This is the swing low that we posted only a few days ago, actually, on the 9th. If this gets taken out, this 15,450 level, then we can start targeting lower prices down to the next support level, which is here, this red line at 15,045. If that gets taken out, again, if it kind of induces any panic, when we start to see these levels taken out, then we've got a nice 38.2% fib level and a sort of band of support to target down here, which will feel a bit painful for anybody that's got a lot of long exposure up here. But indices do look a little bit precarious at the moment. The other thing to note with the DAX is that on Monday, it's switching from DAX 30 to DAX 40. So there's going to be 10 new constituents added to the index. It remains to be seen what sort of effect this is going to have on the impact on the index, whether or not it's going to stabilize things or whether or not it'll actually increase volatility for a period. So do be careful if you're trading that, and also be aware if you're holding any positions on this, what the implications will be as a result of the switch over to the new index and how it will be repriced and how that will impact your position. So I know people, carry positions for a period of time if they're hopeful of things turning around, but check with your broker what the situation is there, because Monday is when that switch is over. Looking at the US indices, so NASDAQ, we saw a little bit of a bounce yesterday. That come just in front of the trend line, actually, and this key support that we've got at 15,184. Hardly surprising, given we know the appetite for the US indices remains strong. That's despite the wider implications of what's going on in the market with regards to energy prices and concerns over COVID-19. I would actually say this was pretty close to forming a bullish outside day candle, which is a pretty good reversal indicator. So that may suggest that buyers are ready to step back in for another go at new all-time highs on the Nasdaq. So that looks probably the best of the markets at the moment. Looking at the S&P 500, this is the broader index in the US. We did see a big break of trend here, but yesterday we saw quite an impressive reversal. although that did stall just in front of this resistance level that we've got of 4,487. So it remains to see whether or not this can be retaken and whether or not we can get back above this trend line that's been in place for quite some time. I think was this November last year. So it's been a pretty strong break of trend, but there are a number of support levels lower to consider. But at the moment, they don't seem to be being threatened, and the dip buys seem to have stepped back in, although we are slightly on the back foot today. Dow Jones. So this tested support yesterday again at 34,564. Seems to have done a pretty good job. The dip bars seem to have got back in. This candle here for me is still looming quite large. This is the candle that we posted on the 14th of September. Quite a big engulfing candle, really, and a bearish outside day. But obviously, we did bounce back yesterday, but haven't been able to retake the highs that we saw from that session on the 14th. So be a bit wary here. If this level breaks at 34,564, then it could open the way up for a deeper correction down to 33,737. So I think Dow probably looks the weakest of the markets. S&P a little bit mixed. Nasdaq is probably the one to go for if you are in dip buying mode when it comes to indices. Okay, that's it on that front. Let's have a quick look at the gun to the head trades from yesterday. So it was only myself, obviously. I went for the S&P for the third session in a row, and unfortunately became a cropper on that one, losing 1R or 17 ticks. So tried to ride my luck on that one after 2 wins previous. It hasn't worked out, so need to rethink my strategy on that and come up with something different today. I did take a couple of minutes prior to coming onto the video today to try and get ahead of this and try and find something that I liked from an intraday perspective, and I quite fancied gold actually. So let me just clear up this chart a little bit. This is the hourly chart on gold. Now, keen eyes amongst you from a technical perspective may be able to sort of fashion some sort of head and shoulders potentially here that's forming. Obviously, it's only on an hourly time frame. These aren't the most convincing of patterns. But really what I was looking at was buying it, because if you look, there's a lot of wicks down here, and it seems to be quite a clearly defined level of support that seems to be working for gold at the moment. So for me, I fancy buying it on that basis. I also quite like the fact that over the last hour, I'll just get rid of that. Over the last hour, we formed this kind of bullish hammer candle right here, which for me was quite encouraging. It seemed to be backing that up. I know we're 5 minutes into the new hourly candle, but I've got a gun to my head and got to make a call. So I'm going to go with this. I'm going to buy gold. If you remember on the daily chart, I wasn't overly convinced by how things look on the longer term basis, but just purely looking at this from an intraday angle, I think there might be a short-term opportunity. So I'm going to target a move here, just because there seems to be some sort of key lows around here, and this is acted as resistance previously. So I'm going to target a move up to 18,000. 1807 on gold. It's currently trading at 1786. And I'm going to place a stop loss below these swing lows here at 1780. Let's just keep that as a round number. So looking for 3-to-1 risk reward ratio on gold today. So that's my trade. Just really hoping that this very narrow range in the short term can continue to play out and we can get some success on that. So that's my trade for today. Okay, day ahead. What can we expect from the economic calendar and what's going to move markets today? Well, we have US retail sales and initial jobless claims both out at the same time today at 1:30 in the US. So these will be dominating the session today. Retail sales are expected to fall 0.7% month on month, while jobless claims are expected to fall 295,000 in the previous week. So that's weekly claims. So a couple of bits to keep an eye out for around 1:30 today. Obviously, there's underlying themes going on in the market, particularly around energy and also what's going on with the COVID situation as well, which obviously hasn't gone away. So that's it from me. Hopefully that was enjoyable and you got something from it. I'll be back tomorrow with some more content for you all. And until then, trade safe, everybody. Have a great day. Goodbye.